I'm Debbie Peverald, and you're listening to the weekly tip from painlessfinanciallearning.ca. This week I want to talk about claiming your medical expenses on your personal income tax return. There's a couple of different tips there, things that people often overlook. First of all, your premiums that you pay on your health plan, your dental plan, those premiums are medical expenses. Secondly, you can go to your drugstore and get a printout of all the prescriptions that you had filled during that year. This will save you and your accountant a great deal of aggravation because we won't have to look at all those tiny little prescription receipts. They can just give you a list, much simpler. Then I want you to think about medical travel. If you had to go more than 40 kilometers in order to get treatment, x-rays, MRIs, any tests or any treatment, then you're entitled to a deduction for the mileage. If you had to go more than 80 kilometers, you're entitled to a deduction for any accommodation or meal expense. So if this is, a part of what happened to you last year, that you had to go places to get treatment, then don't overlook that deduction. Because as you know, we add up all our medical expenses, and if they exceed more than 3% of your net income, then you've got a deduction. Also, you should claim your medical expenses on one family member's return, because one family member you can add up all of your expenses and take it off the person who had the lowest income. It is a credit, so it's worth the same amount to everybody, but the person with the lowest income allows you to claim the larger credit because of the 3% threshold. So, a few things to think about medical expenses. Remember, your return's due by the end of the month. Thanks for listening. This was a weekly tip from painlessfinanciallearning.ca.